Hi, everybody. I want to bring this to you, and there's a bunch of new developments coming. If you saw my post on Facebook, you know that the original title on this is basically that stock markets are losing faith in the central banks. There's a lot of phony stuff going on relating to how the central banks are playing off the crisis going on in the stock market. They can no longer stop the chatter, and now it's basically getting to a point where they're denying the situation altogether, and now it's basically starting to come back and bite them in the ass. And this is happening everywhere. And I think we're reaching a point now where the central banks are starting to pull their authority and watch the markets basically go into chaos. And now it's basically coming back to the central banking execs, and now they're basically wondering what to do, and they're basically denying. So the shift between the power is going. I don't know whether or not the stock markets are going to hold up, or whether we're just going to see them plummet and then slowly come back up, or, you get the idea. Global financial markets endure turmoil on Thursday. Janet Yellen, chairman of the Federal Reserve in the United States, played down chances on the U.S. Central Bank following the European Central Bank and Bank of Japan by lowering rates into negative territory, and basically started to acknowledge the option remained on the table, but basically would not go the route that European central banks and the Bank of Japan or Central Bank of Japan has done. Her comments on the Senate came after Sweden shifted rates to deeper into negative territory, raising concerns over extreme actions likely to be taken by central banks. So all around the world, folks, let me give you those countries again. Sweden, the European Central Bank, I don't know exactly if all their countries are under it, but most of them you can name are. Japan, various others have now shifted to negative rates, and America is basically denying this, and basically from that decision, the markets are still tumbling down the rabbit hole, and they're still denying that everything is okay, that things are going to be fine, and that we are not going to move our numbers into the negatives because of basically popularity. Now, I don't want to tell you that it's all coming down by design. We all know it is, and we all know that basically the 1950s technology treaty or technology ban on treaty or but whatever it was basically kept the technology frozen about 50 to about 150 years behind where it actually is, if not 250. But basically, everybody is feeling the quote-unquote burn of the stock markets losing faith in the central banks. And we've all seen various videos of mine, along with others, and YouTube and various other places, that there is something manipulating these markets to where the central banks are even allowing more authority in the AI systems, or they're giving up authority to people in the background that are plummeting it, or various things that you and I will never see. But this is basically happening all around the globe. Equity markets sold off sharply with the FTSE All World Stock Index entering bear market territory after 20% from last year's peak. Financial stocks suffer another day of heavy selling as Stoxx 600, that's STOXX 600 European Banks Index dropped 6.5% to hit lowest since the Eurozone debt crisis. So I think that would be the 2008. I'm not certain if that's different. And basically that hurt U.S. institutions to contribute sharp declines for the S&P 500 in morning trading. I'll show you all this. You guys can see it. There's no secret here. Markets have evidently lost their belief that the powers of central banking policy, said Andrew Law, head of Caxton longstanding macro hedge fund. Markets have lived on the basis of the central banks and were there to provide liquidity and support, and that this would be enough. So basically, their idea, folks, is that they would provide support and they would bring them through. That's not the case anymore. That's not the case now, and it hasn't been the case for a number of times, and now they're losing the faith. You lose the faith, folks, what happens? You fall. Doesn't matter what it is, you fall. I know, I'm supposed to pause videos and show you this and everything. But markets have lost their belief in the power of the central banking policy. Andrew Law, head of Caxton, longstanding macro hedge fund. Markets have basically lived on the basis of central banks were there to provide liquidity and support, and that this would be enough. Folks, this is no longer enough. This is no longer enough. The powers that be have engineered it to where all these guys are now basically getting axed like the people did in the early 2000s, and from the auto industry and everything else, and now the financial market's getting axed. It's one industry per every 2-3 years that they're basically going through. Right now, it's the the financial world, the financial industry, folks. Before it was the auto industry, and before that, I forget, but every couple of years it's a different industry that's getting taken down slowly. This is the part right here on where the U.S. Federal Reserve got involved and how it said it was not going to put rates in the negatives. Janet Yellen, chair of the Federal Reserve, played down the chances of the U.S. Central Bank following the European Central Bank, Bank of Japan, and down here, where is it? The Bank of Sweden, wherever it is. So you guys get the idea here, folks. They have finally reached the point, folks, where the stock markets are losing faith in the central banks. They are now realizing that they're two separate industries, one that can no longer do its job or won't do its job or gave up its power to do its job. Any number of things you and I will never know about, but this is true, folks. This is true. Thank you.